Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. Risk sentiment roared back after People's Bank of China set the yuan at a stronger price against the U.S. dollar. They also did a favorable supply adjustment. And what we're seeing here is equities and risk come back in play here from a really awful Monday and a very poor start to the session Monday night. The dollar index hit down near 97. 97 is a bit of a floor in the dollar index because it was a ceiling going back to middle of June. What we're seeing here, though, is a consolidation, but the dollar did move higher despite a strong German factory orders number this morning and a weaker than expected jolt job openings in the U.S. But what we're also seeing is as risk sentiment came back, we're seeing the odds for a Fed rate cut of 50 basis points in September dissipate a bit. So again, that's favorable for the dollar. Now tomorrow we look to German industrial production, and we have resistance in the euro is still intact, 112.5, 112.74. So keep an eye on that. But the tape is favorable above 112.25. So they're looking at a tight range, but that's the levels we're looking at. And you have a move here that started late last week. It's been roaring higher in the euro. It's settling in again above 112.25. It remains favorable. Now German industrial production tomorrow, and then we also look into what is risk doing. Some of the data overall was good last night. I mean, you're seeing strong data out of Korea, you're seeing strong data out of Japan, and then the German factory orders number. Does that continue? That's going to bring a tailwind to the risk sentiment overall, and it's not favorable for the yen. The yen lost about 40 ticks here today. It did get out to a new high, and it achieved 95, but it pulled back sharply. And we're right at that pivot level we discussed yesterday. And below that pivot, it's on the FX Rundown, that immediate term uptrend is broken where the bulls are in the driver's seat. Now, we do have some support levels below, so take a look at that. But if equities, which overhead in the S&P, you do have the 100-day moving average, 2907. Below 2907, and there's some resistance levels that aligns with that we have on the Morning Express. Below 2907, it does remain vulnerable. So we're going to have a lot of volatility, and that is favorable for the yen overall. So keep an eye on that. But as well, the Aussie dollar is back at the lows here before the end of the day. Now, the Aussie dollar did have a little bit of a move up after the RBA left rates unchanged, and overall risk sentiment came better, but it dissipated throughout the rest of the session, and we're finishing right in the lows of the session and below 68, and that keeps a path of least resistance lower in the Aussie dollar. And now looking at the Canadian dollar, it did break support. It finally did. It was bound to happen, and below 75.60 we can see this thing trade lower. We have IVPMI tomorrow, and that's going to be crucial for the Canadian dollar. So keep an eye out for that, 7:30 a.m. Central Time. But give us a call. We're here to help talk about anything on the board. 312-278-0500. You can email us info@bluelinefutures.com. Check our website for updates. You can sign up for a free trial for research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors.